Good morning. It's 5:57 a.m. Pacific Standard Time. It's 6/29/2011. We have a Google gap up today. We have a Sina gap. We have Netflix. We have the price lines, and we had everything that was oversold short term that has been in a bull trend back to the upside now. With the Greece Parliament, with their votes, we are hearing that there are 68 no and 77 yes. And there's lots of writing out there. This morning's opening bell is going to be quite volatile because, Europe wants this thing to pass. It's once again bail me out type of deal. It's how the actual volatility is going to work. And what we will do is put bids below the marketplace so that we can let that upside volatility, once they do make their top end of the trade, basically, once we get the highs in, we're going to see how they consolidate the highs, and or if they immediately start to slide that bid going downward, then we're going to look and see what that trade ends up being. Because of the high volatility of the opening emotional event, it's always better to put bids below the market so that if someone does walk away from the bid down toward the previous day's close from these gap opens, so you have a chance of getting hit, and the risk to the entry is very minimized with the stop market order immediately as well. And then we see what they do in the as far as our platform goes, as to how strong they are, or medium or weak that these price movements are. It's been quarterly buying, end of the month, portfolio dressing. The markets were oversold, as we stated. They were due for a nice pop off of the bottom. We are in a Independence 4th of July weekend coming up. Once the short sellers have been squeezed when they were shorting the bottom of this pullback, is that they also had to buy to cover, and that's given us quite a nice little move to the upside in these things. Then you have to throw in the Greece deal, and you have the combination of three things working for the bull side, which is good to be buying at support and selling into resistance. We've also done a special mathematical calculations on trend analyzers, and we can clearly see from the top reversal to the bottom reversal is that we're getting fairly weighted in some of these trends, and they're not nearly as bearish as they once were. The thing about it is, though, once we do hit certain peak levels at price action, is that buyer has to still remain there. Let us not forget that the upside movement, and these are artificial prices in the futures, that's gapping these up right now, is that the volume to the upside has been extremely low. On the gap open down ratio on the Nasdaq, you have one stock, PRGS. That's it. So you can see the imbalances and where people are at for the bull side of the gaps versus the downside of the gaps.